CNBC TV18, embarking on a quarter century of excellence.
Hello and welcome to the CNBC TV18 Mumbai newsroom. I'm Ekta Batra and you're watching your stocks this afternoon. Well, it's turning out to be a session where we are seeing profit booking from the top for the markets. So we have the Nifty, which is 135 points off the day's high, 375 points off the day's high for the mid-cap index, and 560 plus points off for the Bank Nifty from the day's high. So as you can see, the Bank Nifty is currently in the red, down around 0.6%. We have the mid-caps, which are still marginally holding up with a gain of around 0.2%. But the intraday turnaround that we've seen in all of the indices is the key talking point at this point in time. Maybe it is the year-end, the lack of volumes, the lack of participation, which is probably just weighing in on our markets and maybe going into a long weekend as well. But as of now, the Nifty is completely flattened out with just about a gain of around 10 odd points and the Bank Nifty underperforming. Well, joining us this afternoon is Astha Jain, research analyst at HEM Securities, Ruchit Jain, who's joining in on the technicals this afternoon. Ruchit as well as Astha, welcome to the show. Well, Ruchit, I'll start with you. This little bit of a turnaround that we've seen for the indices, how would you read into it? What would your strategy be?
Hi, very good afternoon, Ekta. Well, we have seen that this week the volatility has been higher in the market compared to what we have seen in last 1.5 months. And we believe that markets would now go into a broad consolidation phase, considering that the momentum readings technically are quite overbought post the recent run-up. Entirely, if you look at the recent rally, which started from 18,800, from 18,800 to we rallied up to 21,600, but we have not seen any kind of corrective phases. So I think in the short term, we would go through some time-wise correction, if not any significant price-wise correction, where index would consolidate within a broad range of 21,400, 500 on the higher side and 20,800 to 20,900 on the lower side. So, if one is looking from a very short-term trading perspective, one should not expect any significant big moves on either side. I think this is the broad range where some time-wise correction would be seen in the market.
Okay, all right, fair enough. So that's the word coming in terms of the overall market texture at this point. Let's get in a couple of queries now. We have Sainath Srinivasan, who writes to us from Tamil Nadu, who holds 50 shares of Paytm, which he's bought at 1,068. He wants to know what to do, whether he should book his losses or remain invested. Well, interesting question there, because I'm sure a lot of people have this query with regards to a lot of these newer age stocks, which they probably bought at highs. Paytm in particular, Astha, let's kick off this query with you.
So if I talk about this counter, I think it's a hold from our side because the losses will be huge if I say to exit. Why I'm saying hold? Because I really want to see their upcoming financial results, because in the previous commentary also management has stated that they have tried to scale down their postpaid business, and that was done basically in order to address any asset quality related concerns. So now we have to see, because there are major concerns related to the asset quality, but on the other side, if we see their growth matrices. So what I believe is that now this company, they have started giving high ticket personal loan, merchant loans, so that can act as a growth drivers for the company. And in fact, we have seen there is an increase in the lending partners also. So now combining all these figures and facts, what I suppose is that one can remain invested in the stock at least till the results came, and then they can take a review in the position again. But my idea here is to hold at least till the results come.
Okay, and Ruchit, what would your recommendation be?
So in the recent correction, we have seen that the volumes have gradually increased, and generally whenever we see corrections backed by higher volume, those stocks tend to underperform the broader markets. So I'm not expecting any significant up move. Yes, things are oversold, so a bit of pullback moves could be seen towards 700, 720 range. But ideally, I would advise to keep a sell on rise approach, and whenever we get such pullback moves towards the resistances, we should look to exit and book losses over here. I think there are much better opportunities available in the market where these losses could be covered from.
Okay, all right. So that's the word coming in on PTM. Well, while there might be intraday volatility, as you can see on your screen, there are a couple of stocks which are managing to buck the trend. So, for example, GAIL is sitting at a record high, but on the other hand, Metropolis is off the day's high. It was buzzing with a gain of around 2 to 3%. It's completely flattened out, along with Dr. Lal PathLabs as well. Well, Deepak Dave writes to us from Gandhinagar. He holds around 400 shares of JSW Infra, which he's bought at 212, so just about flat in terms of a performance. And or marginally higher, you'd have to say. He's a long-term investor, wants to know what to do, whether he can buy more shares of this particular company. Well, technically, what would you say, considering that it's been largely flat on a year-to-date basis? Ruchit, you go first.
So it takes a recent listing, so it would be a bit difficult for me to give any long-term view, considering the data is quite limited on the chart. So I think Ekta would be fundamental outlook should be taken for long-term outlook over here.
Okay, fair enough. Well, yes, that's my mistake. You don't have enough technical data for new listings. But over to you, Astha, on this one. What would you recommend?
So I think when the issue came way back in September 2023, like 2 months ago, it was at the price of around 119, and we have seen up move till the level of 220. So we have seen a sharp up move. At the time when the issue came, it was purely priced, but now what I believe is that definitely the valuation has been stretched. As we all know, this company is one of the fastest growing port-related infrastructure company, and they are one of the fastest growing in the terms of cargo handling capacity as well as the volumes of the cargo handled. And they are the second largest commercial port operator in India also. Now, what is positive about this company is their concession periods, which is always act as a positive for these companies, because the longer the concession period is, the longer they get the government approval for running a port. So here the concession periods are very long. It may range from 30 to 50 years. So that is one of the positive point about this company, apart from the strong financial performance which they have posted. But since we have seen the stock prices has already seen a steep rise till the level of 225 all the way from 119. So buying at this level will be little more risky. So what I recommend is to hold the current positions. And if anyone want to take any new position, then again wait for the results. So that will give more idea or insight about the valuation of the company, because at present point of time, the valuation also seems to be fully priced. So hold is what I recommend for the stock, although I will give the price target, which is at around 245 to 50 levels at the initial stages.
Okay, all right. So that's on GSW Infra. Let's get in another question now. We have Sridhar, who writes to us from Chennai, holds 30 shares of Asian Paints, which is bought at around 2,892 odd rupees. Wants to know the future prospects of his investments. Well, Asian Paints, enough data on that one, Ruchit, so tell us.
Yes, certainly. But the short to medium term trend seems to be positive. I think the price-wise corrective phase is behind for the stock now, because the recent up move from around 2953 and 3000 levels has seen a gradual upticks in the volumes too. And whenever we see price up move supported by good volumes, we can see a good outperformance for the stock. So I think the worst phase is behind for now. So it's better to hold on. One can expect target somewhere in the range of 3,500 to 3,550 in the short to medium term.
All right. What about you, Astha?
So I recommend hold, as well as some new buying can also be done, provided the stock should see some sort of dips. So buying on dips as well as hold is recommended from our side. First of all, want to give the price target, which can be 3,500 to 3,550 at the initial level. So if I talk about the Asian Paint, yes, the results which they showed in the quarter gone by was muted. But what I'm expecting now, since their distribution reach is high, because they have told that 0.16 million retail touch points they have shown as their distribution reach. Along with that, now their kitchen and the bath business will start giving results from the H2 FY24 onwards. So we really need to see that part also. And what we believe that some sort of rural demand will also happen due to the government spending. So all these factors are indicating towards the upside of the stock. So we are recommending hold as well as buy on dips with a price target of 3,500 to 3,550 at initial levels.
Okay, well, let's get in another question now. We have Shelja Kapoor, who writes to us from Mumbai, holds 10 shares of Aarti Industries, which is bought at 400. Wants to know what to do, whether to remain invested or to sell at current levels. What would you recommend? Currently sitting on a good amount of profit, Astha, on this one. Aarti Industries, do you think it would probably be a long-term buy, maybe even add on in terms of an investment?
Right now, I would not recommend to add on because management in their commentary have already told us that, they are not expecting a strong recovery in the agrochemical as well as pharma business. And now this all these businesses can show some sort of revival only in the H2 of CY24. So I think calendar year 24 and that to the second half of that year can see some sort of revival. So what I believe, in fact, they have downward revised their guidance also in the terms of EBITDA. So right now, I'm not very much positive to buy the stock. Maybe one can hold the stock, but not more than the price target of 645 to 650 at the initial level. So I recommend even to book partial profit because the profits are huge. So book some profit and remain invested for the remaining one for the price target of 645 to 650.
Okay, technically, how does it look, Ruchit?
So seems some more pullback move would be seen, would be there in short to medium term. So ideally the buying price, first of all, it's good because the price-wise corrective phase has already been done. Now, if I take out some technical retracements of the entire previous corrective phase which has gone through, then 38.2% retracement, which are the Fibonacci levels, that is coming around 655. Just around what targets were even Astha mentioned. So I think we could see some pullback towards 655. Those ideally would be good levels to book profits on long positions.
Okay, all right, Ruchit as well as Astha, just hold that thought. We have a couple of more queries. Need to take a short break. We'll be back with more. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
पुलाची जाना था बस छुट्टी
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, we do have a lot of queries lined up on your stocks this afternoon, but before we get to them, it's a little bit of a choppy trading session because we have recovered from the day's low for the market. So the mid caps are up around 198 odd points. We have the Nifty, which is up around 0.2% as compared to just about a flat performance, and the Bank Nifty, which is down around 260 odd points at this point, recovered from the day's low for the Bank Nifty. So there's definitely buying taking place at lower level for all indices. But let's get to another question now. Ruchit Jain writes to us from Patna. She holds 20 shares of NTPC, which is bought at 150. She wants to know what to do, whether to remain invested or to switch to a more profitable stock. Well, Ruchit, what would you recommend on the technicals? Do you expect further upside on NTPC or maybe even switching to another counter?
Well, good profits, but I would still recommend it to continue to ride this trend. We have seen many PSU names such as even REC, PFC, giving humongous returns, in last 1.5 years. So I think NTPC is also into one such structure where the high top, high bottom structure, good price volume action, any kind of minor dips are getting bought into, and the stock is not even breaking its short-term moving average supports. So I think it's a good trended phase which is going on. So rather than having any kind of cap in the mind that where to exit, better to use a trailing stop loss method so that whenever there is a reversal, you exit only at that time. Now the support base for the stock has shifted to 270, 265. So keep a stop loss below 265 as of now and continue to ride this trend. And as the stock price goes higher, it would be wise to revise the stop losses higher and continue holding the positions.
All right, Astha, what about you?
I would like to recommend hold on this counter. First of all, price target, they can be set at around 315 to 340 levels. So now, because this company is like one of the India's, I should say, our biggest power company in the terms of the thermal portfolio. And secondly, they have added a strong renewable capacity in H1 FY24 also of around 110 megawatt. So now their portfolio is around 73.8 gigawatt of this capacity in the renewable space, and they have a strong capex plan also, and some of them they have done in the H1 of FY24 and maybe another maybe in the H2 of FY24, the remaining one. So I think all these points are figuring towards the strong future performance going ahead also, and that's where we are recommending hold. Price target can be set at around 315 to 340 odd levels.
Okay, all right. Let's get to another question now. Mariska writes to us from Goa with an investment question. She asks if she can invest in HOEC or Hindustan Oil Exploration from a longer term perspective, that is of around 3 years. So that's her time frame. Astha, over to you on this one. It's a fundamental question, long term portfolio question. What would you recommend on HOEC?
So this is HOEL, I suppose, Hindustan Oil Exploration Limited. So yes, one can go for the stock, they can buy also, or remain invested if someone has this in the portfolio for the price target of more than 200 at the current juncture. Maybe 210 can be set as a price target, and then the long-term price targets can be revised. So talking about this company, because they are among the one of the first private sector upstream oil and gas company, and now the management has planned to reduce the debt. In fact, they have plans to drill more blocks. So going ahead also, so all these things I think will help the company in showing strong performance going ahead, and company is well poised to show such kind of performance at the present juncture also. So recommend buy as well as hold on this counter with a price target of 200 to 210 at the initial levels.
Okay, well, it's given decent returns of around 30% this year. On a 3-year time frame, would you have any view, Ruchit?
Yeah, I think we may see some pullback move in the counter in the short to medium term. But frankly, if I look at from a longer term perspective, then I would tend to avoid investing in the stock from a long-term perspective. I think better alternative could be seen in Oil India, where technical structure is quite positive. The recent high top high bottom structure has been supported by quite good volumes. And we have seen one recent theme that PSU stocks which are giving good dividend yield, I think those stocks are showing a good outperformance. So comparatively, even if you compare the dividend yield, then of course Oil India is giving good dividend yields as well, good technical structures. So I would prefer going long on Oil India instead of HOEC from a 3-year perspective.
Okay, all right. Let's get in another question now. Parth Shah writes to us from Gujarat, holds 1,000 shares of Ircon, which he's bought at 45 odd rupees, wants to know what to do, whether he should book profits. Well, there was a little bit of volatility that we saw 2 days ago in the markets, and that was sort of bought into the next day, and there was this recovery that took place in the broader market. So, but is it prudent now to invest, to sort of book profits where somebody is sitting on a good amount? Astha, over to you on this one, and Ircon, if your view on that.
Yes, so talking about Ircon, I think yes, some profit can be booked at this counter, but we have seen that the company has bought the OFS recently, and from the 154, it has seen a decent rise right now. But what I feel that going ahead also, due to the strong order book of around more than 32,000 crore, the company is well poised to show strong returns going ahead also. So we are expecting good returns from this counter. In the longer term, maybe in the medium term, price target can be set at the initial level of 185 to 190. So partial profit booking is advised at the present level, but still I recommend to hold some sort of quantity in the portfolio for the longer term targets of around 190.
Ruchit?
Certainly, it would be a hold on this stock. As you rightly pointed out, that a couple of days ago we witnessed some profit booking. So it's seen that the price up moves were supported by good volumes. But those in between profit bookings or in between small corrections, we have not seen any kind of higher volume sell-off. So I think this is a good structure. I think over a period of time, this high top high bottom structure would continue. And whenever there would be intermediate corrections, this stock would witness buying interest at lower levels. So one can expect targets around 200 over medium term. So I would recommend to continue to hold on. Maybe around 200 would be good price to take some money off the table.
Okay, all right, Ruchit as well as Astha, thanks very much for joining in and wish you a great Merry Christmas, and we'll see you next week. Thanks very much for joining in and taking us through those questions. That's all the time that we have on the show. But do remember, you can email us your questions and we will address them with our experts. Stay tuned. Closing bell up next.
CNBC TV18, embarking on a quarter century of excellence.
Brought